Tom here, FlipAnythingUSA. Let's see here. Did we start? Yeah, we did. Anyways, hey, today we talk about the economy some. I've been looking at some properties. I got Chris here with me. And also I finally found my little dream machine. I've been looking for a 1997 Land Cruiser. And actually one of my students actually helped me get it, Jose. I really appreciate you doing that. Found the dream vehicle in Illinois, and Jose knows something about cars, and he actually went out there and looked at it and confirmed that it was perfect. And maybe I can show you that too. So we'll be right back. All right. So, you know what? I did a video earlier this morning when I was checking on some of the last houses that I bought. I got 3 that right in one particular neighborhood, and just getting painted and tiled and that sort of thing. If you haven't seen that, anyways, no big deal. But I took a look at Zillow just to see what the trending was doing in the neighborhood, and they're definitely showing a downward trend. And listen. Zillow is not the tell-all by any means, but it is a point of reference, and it's one I recommend my students use to look at it, because it's just a point of reference. I use PropStream too. In fact, there's a link below if you're interested in PropStream. But if you're a student of mine, I usually I'll look it up for you anyways. I don't know what you guys are doing or what you're working on, but if anybody's got a real estate question or want to talk about anything, you can call in at that number above there. And let me get Chris in here too, which we've been working the studio here. So where's that thing? Yep, there we go. And there's Chris.
Yeah, Tom, on the Zillow note, I always make sure that I go in on Zillow and I put I say that I'm the owner of the property, and that way every month, I think it is or so, every month or 2 months, they actually send me a report on the house. And I just
on whatever you're looking for.
No, well, no, I do that too, but I'm just talking about like my house that I own, that I live in, or even a property, an investment property that I own that I live in. On Zillow, you can identify that you're the owner of that property. And when you do that, they send you a report every month or every couple months, and they let you know if your house has increased or decreased in value, and you can kind of see the history of that on there. It's pretty neat.
Yeah. Are you? I mean, you watch your home quite a bit? Why? I'm just curious.
Well, not you can do that on your own home. I'm talking more so about the other properties that I've owned, like. Even as of recent, I got an email of a property that I had to go in and actually disable, saying I'm not the owner anymore, because I keep getting these emails about this one property that I sold. And this one property that I sold, it's dropped probably another $50,000 in value. And so again, I'm thrilled that I sold it when I did. I don't think you can ever.
Oh, you're talking about the lake house?
Yeah.
The river house. Yeah.
I don't think you can ever time the market perfectly. I think if you try to do that, you're gonna be waiting forever.
Right.
Nobody can time the market perfectly, but I really am glad that I sold when I did. I'm in a good position.
Listen, you did fine, because listen, here's one of the things. Listen, as long as you can get, and I have my buddy Doug, who, if you ever look, you'll see the old guy's rule. Did some videos with him, and he's the only one I know that's really most like me, that's done a lot of stuff. He's actually done a little bit longer than I, but we actually came from the same area in California, came out to Texas. I came out after him because I was kind of blown away he had a beautiful home on State Street in Santa Barbara, and it was probably worth $500,000, but we're talking about like late 80s to like 90s, maybe 1990. And for him to leave Santa Barbara, I thought, you left Santa Barbara, I got to see why. And it was worthwhile leaving, because there was a lot of opportunity in the area. And so, sometimes you got to chase opportunities, sometimes you got to follow it. But in general, I still say don't travel too far away. You can just the deals are right here at home. And if any of you don't believe that, I can jump all over the globe here and I can show you where I bought clusters of properties in any one particular area. You guys know I talk about it as being barbells, having a clump here and a clump here, and usually they surround my work or surround my, my home, or it might surround my girlfriend's home or my lake house. I buy stuff around each of the places that I visit most often. And anybody, hey, listen, you guys can call in that phone number above. Anybody wants to call in, we'll take a call. And we can talk about whatever you want to talk about. Yep.
Yeah, and Tom, you talk about the barbell. You talk about it in the book, but you talk about that a lot whenever we're on YouTube. And some people, somebody asked a really great question the other day. They said, "Well, how big of a barbell is too big?" If I'm running from one end of town to the other, and you made an interesting comment. You're like, "Well, if you're doing business in one country at the beginning of the week and another country at the end of the week, and you're back and forth between those places all the time, that's your barbell."
Yeah, anywhere you frequent, anywhere
that you're familiar with.
Yeah, I mean, look, my girlfriend lives in a neighborhood, and and turned out to be, I like this neighborhood, and I think I bought 12 homes there now.
Wow,
quite a bit.
Yeah,
and in a relatively short time. And actually, Chris is generally in that same neighborhood, and he's put his thumb on at least 3 of them, right?
Yeah.
In the same area.
Yeah.
And there's the opportunities are everywhere. A lot of people don't get that, but it is just a fact. The opportunities are everywhere. And, a lot of people, this is why when I see people talk in terms of deals and not specifics, it's very frustrating. And, the money is right under your nose. I guarantee it. Hey, by the way, if you just got here, please hit that subscribe button, hit that like button. Helps the channel. I've been buying real estate for 41 years. Bought my first property at 19. Was a millionaire by 28, and that was in the 80s. So that would be like having a few million now in that short a time. And, I've got a lot of students in the class. We've got FlipAnythingUSA, which we're going to jump over to Zillow here in a minute. But, actually, Boutique Motors Incorporated is where I just bought my car, by the way. I won't bother jumping over there right now. But anybody got a question? Chris, what's on your mind right now with the real estate?
Man.
Prices going? The cost of money is getting expensive again.
Yeah, part of me. I'll tell you a little. I'll share this with the people that are watching, people that will be watching, because this is a telltale sign. But I was talking with a home builder yesterday, and he said, "Hey, I know you're an investor. Would you be interested in purchasing 3 or 4 lots from me?" And I was like, "Oh, why is that?" He goes, "Well, just the people have stopped building, and I'm stuck with lots that people aren't going to build on, and so I'm asset heavy right now and kind of cash poor. Would you be interested in buying these lots?" And for the price that he wanted for them, I was like, "No, not interested, not right now." And I'm I'm not in that boat that he's in,
right.
But I think a lot of people are going to be. And so I think with the Feds raising the rate just like they did yesterday, I saw I surf a couple. I don't know if anybody else does this, Tom. I know you've talked about California and Florida before, but I have my barbell. Mm-hmm. It's probably about an hour and a half long that I frequent back and forth.
But you do. You go back and forth.
I go back and forth a lot between my hour and a half, 2 locations. But I also kind of have a couple dream locations of, hey, if I could buy a piece of real estate over here in this area, I know for the rest of my life it's somewhere I'd like to visit, somewhere I'd like to go, somewhere I might like to retire someday. And just recently, one of those is a beachfront community. You could only buy a condo there for $500,000. And as of recently, just the other day, I saw a property listed for $350,000. And so I started thinking, oh, that's a good deal. But actually, with interest rates, yep. It's actually not a great deal. It's something for sale.
Right. Well, I'm glad you said that, actually, because that's actually could be an interesting topic. So look, I'm a numbers guy. I always look at the money, and I say it all the time. people don't buy smart. They usually don't say how much. They say how much a month, and that's what they buy based on what they can afford. But it'd be kind of an interesting, and I'm going into the FlipAnythingUSA site, and actually I can show off something that's kind of interesting. I urge anybody watching, play with an amortization calculator. You know, before they had the internet, I just had an amortization book, and so I could grab and look up $200,000, $300,000, $400,000. I could see interest rates anywhere from 2 to 15%, 20%, and I could calculate what the payment would be, based on that value and what what it would be. But so let's actually play with that math a little bit. Let me put this down here. So look, this is also something, by the way, if you get into the mentorship, you're kind of looking inside the mentorship. First of all, there's the course. You get in the course, you get a 28-hour, what I call a crash course, and there's nothing else like it. And you can talk to the students that have been in it. And, we have fantastic success stories, people that have made anywhere from, 10 to, a couple million or a few $1 million. According to one student, he's made over, $3 million now. He's got $4 million something worth of property, and he's only got about $800,000 in debt associated with that. And he's got no money out of his pocket. He's actually taking cash out. Yeah, and so he's sitting there with $3 million in property equity, and $4 million property, but $3 million equity, and he can see the future. That's the best thing. That's the most rewarding thing for me in mentoring people, is just seeing guys like myself that are younger than me, but I used to be there when I was younger, and seeing these guys go, all right, I can see the light. You know what I mean? Everybody's, I remember working my ass off, and I remember just dreamed about just having a little house paid for, in the mountains, and I pictured having a little outbuilding that I could build cabinets out of, and my thoughts have changed quite a bit. Right. But I'm living in a place right now that is quite valuable, and I'm kind of an empty nester. I don't need near what I have. But I'm comfortable, and it's so I have it, and I can afford it. It's a whole lot different. Your perspective changes as you make more money. Mm-hmm. And but even I can tell you that I get even nervous with the interest rate going up like this, even though I'm quite comfortable. I mean, I've got all my rentals are full. I don't have anything that I need to sell or want to sell. I got a couple properties I might sell to a tenant, which I was going to talk to you guys about that. I kind of jump around too much.
But I'm living proof of that too, Tom. I mean, much younger. But if you were to tell me if you were to tell me, 2 or 3 years ago that I'd have a couple $100,000 sitting in my bank account right now, yeah, I would have laughed at you and said,
some real estate,
and real estate,
yeah.
So, I just paid cash for a lot. I paid $100,000 for it. It's worth every bit of $200,000.
Yeah.
And so, I've got that going for me.
And you have those options because you like I say, you've got some money. And here's the thing, Chris, the property that he just sold, if, like I say, you got rid of it at the right time. You know what I mean?
Right.
And I was going to say, don't feel bad about that, because as long as you get rid of a property, let's just say that, there's a prime time is at 100. If you get it within the top 20%, if you get it within the top 20% of what the values, feel great, because if it's very difficult to hit it. And in all honesty, I actually hit it right on the head this time. Everything I got rid of right before the peak, before all the interest rates went up.
I mean, you sold some of those houses around here.
I sold everything before. Everything jumped.
Yeah.
And I rolled that into nice buildings. Mm-hmm. And I got a very low interest rate on those lines of credit. I paid cash for a couple of them, but I pulled.
You got tenants in there. And
yeah,
squared away.
Yeah. In fact, the 4 houses that I got rid of that we're probably only bringing in, I don't know, I'm going to say $50,000-$60,000 a year. They've been converted into a better, higher quality investment as far as cash flow goes, and now I'm getting $144,000 roughly a year just on those, So, and that's seeing is I just kind of got everything maximized at the right time. Hey, again, please hit that subscribe button, hit that like button, comment on the video if you don't mind.
We've got a question, Tom.
Yeah.
First question comes from Cheryl. Cheryl says, if you're living in an apartment, would you buy a home first in this current market and flip second, or flip first and buy a home after?
You know, here's the deal, Cheryl. I bought 5 houses before I ever moved into one of the homes that I bought. I bought 5 of them, and none of them were places I wanted to live. I actually moved into one for a couple months because it got vandalized, and so I moved into it so somebody couldn't vandalize it, and I just moved into it till I got it sold. But the bottom line, it's just math, okay? Listen, if you can secure a place to live, and this is really for everybody, if you can get a really good deal on a rental, let's just say you can rent $1,000 apartment for $400 a month, rent it, and then start buying your property. And, you know, you don't have to live in the property you buy. You don't have to live in it. If you can get a place and keep your overhead low, and I got a perfect example of this. In fact, I'll show you. But yeah, I lived in a trailer on probably an 1.5 acre dirt road that went to it. In that dirt lot was a bunch of tractors. And I had a jacuzzi I had bought and put outside the place. And when people drive by at night, there'd be a dust cloud blowing over my jacuzzi. It was really kind of a white trash heaven is what it looked like. But I enjoyed it. And it was a lot of fun. But my rent was $100 a month. You know, and this is, believe me, rent wasn't $100 back then. You know, it was just a cheap, inexpensive place to live. All I needed a place was to sleep, get a jacuzzi at night, whatever, you know, entertain. And then I worked my ass off. I'm somebody that worked 12 hours a day. And when I didn't work 12 hours a day, I was looking for property, you know, the balance of the time. And so it's not that important. I mean, you make those decisions. If you have kids, it gets different. It gets complicated. I didn't have kids. I was young. You know, when I first started, I was only 19. And then I did find a place. And that was before I was 19. And then when I did get a place, you know, I lived in the building for a little while. But it's all about math, Cheryl. If you can negotiate a great deal that you can rent in cheaper, you know, like a really good deal, then it doesn't make sense to live in the home that you buy, or the duplex, or the triplex, or whatever it is you're going to buy.
Right.
Yeah.
And Cheryl, when he says if you can make a really good deal, which actually in our market right now, since you're the buyer, you have the leverage in our current market because I mean, people that are selling, they're stuck with their homes right now. So you have leverage there. But also, if you don't have Tom's book, check out Wake Up and Smell the Real Estate, because he has a lot of tips and tricks in there that will help you buy your home, whether it's a flip or a home you're going to move into, at a great discount.
Right. And listen, we're on a perfect subject right now. We're all talking about math. So look, let me move my head out of here real quick. We're talking about math, and so everybody stay tuned for this. You don't walk away from this, because this is a really good for a lot of you guys that are a little bit math challenged, and I know a lot of you are, to be honest, because I hear it all the time. So look, this is inside the mentorship. Real quick, let me just show you this. When you join the mentorship, you'll go in here, and by the way, take the mentorship survey, get into the webinar. See this here? You can click on this, sign up for the webinar, and you'll get sent some information. You'll have a video webinar you can look at right away. Very worthwhile for especially you guys that are new. The mentorship survey is also something you can take a look at. But let's go back to the calculators for a second. When you're in the back end, you can get into these calculators that I created. And this is what I wanted to talk about. So let's talk about your place that you just sold.
Okay.
For $600, $650, how much was it? Place?
I sold that place for $738.
Okay, that's fantastic. So look, he sold a place for $738 that he was running an Airbnb out of, and originally you paid less than $200 for it, right?
$155.
Yeah, $155. So he made $600,000 on this property. Now he held.
And granted, when people hear that, they need to understand, I did not pay. I paid $155.
Right.
My wife and I took money out of our retirement account as a down payment for that. So we barely put, I mean, we put like $14,000 down or something for this property.
So you got a 90% loan?
Yeah.
Yeah, and so he got this, but just getting to the numbers on this, when he sold that property, so look at this loan amount. I'm just going to put, they probably put 20% down. So, right, if they bought that property, so they put 150 down minimum.
Sure, yeah.
And so let's just take $600,000. So here's $600,000. And the interest rate when you sold it, do you know what their interest rate was?
It
was at a low, so I'm going to say 3, right?
I was going to say 4.5 maybe.
Oh, really? Okay. We'll do 4.5. Okay, so 4.5.
And the reason why, Tom, because this was an investment property as well for them. It's not the traditional,
Right. Okay, so that because it was an investor owner, it wasn't a homeowner.
Right.
Owner occupied, they would have got a little better deal.
Right.
Well, let's just do the owner occupied deal for now.
Okay.
Because listen, I'll tell you what. Every house I buy, every house I've ever bought, I'm saying I'm occupying it when I was getting. It really.
You just change your mind.
Just change your mind. Yeah. Just plan on living in it. I'm telling you right now, when you're going to buy a home, plan on living in it so you can say, I'm going to owner occupy it, but there's a tenant in it right now. You buy it, whatever. You change your mind. You don't move into it. It's not a crime. It's not a big deal. You have the right to change your mind. Although I'm not giving any legal advice here. If you intend to live in it, you can intend to live in it, and then you can move out. But so looking at these numbers here, so on this $600,000 loan that these people got, assuming they were going to owner occupy it, they would have got about a 3% rate. Now look at their payment. It's $2,529. Now today, to buy that same house today, a year later, they're looking at 7.1, I think.
7.3?
I heard 7.3, but okay, we'll say 7.2. I don't want to, we don't have to exaggerate it or overplay it, but now take a look, $4,000 a month. So what was the difference between those two again? What was that? So it went from
25.
20.
Right?
It was a 25. Let's do it again here. What did I say? 3. Yeah. So there's like basically $1,500 difference in the payment. And remember, people are not how much a month. So if Chris was trying to sell this when he did, and let's say he hesitated, let's say he held it to today. Now, the same money to cost $4,000, I mean, when they bought it, they're probably looking at a $2,500 a month if they're owner occupied. Today, they'd be looking at $4,000. So they wouldn't be able to afford it. So let's just take this down. Let's say, Chris, let's just base it on what they can afford right now. So there's $450,000 for an $1,897 payment. But at today's rates, 7.2.
Yeah.
So right now, even if he took $150,000 off the price, their payment would still be $500 more a month. And that's taking $150 off. So this is why I say it's important to play with a calculator, because the numbers kind of tell it all. So now we take it down to 400,000, which is, we're basing it on the loan. This is the loan money.
Sure.
But again, you're talking about $200,000 less money costs the same today as it did at that time.
Yeah. And at some point it starts to not make sense for me to sell it, in the sense that I did a cash out refinance on that property. I took $100,000 out so that I could go buy more real estate.
Right.
Yeah.
And here's also the thing: even if Chris had that property today, I would still advise sell it. Sell it for the $400,000. It doesn't matter when property values change. You just have to face the fact that, and that's why people say, "Oh, you can buy." Some people say, "Don't buy now. It's not a good." Listen, it's always a good time to buy. You just have to buy based on today's values.
Yeah.
If something I could buy for $400,000, a couple months ago, if today it's worth $350, I'm going to offer less for it today than I would have then.
Right.
I mean, it's just how it goes.
I think an important lesson I learned on this property, Tom, was specifically this property. to not get emotionally attached to the property. This property, you're trading something, in my opinion, you're trading your perspective and your dreams of the property for something even better. And what I mean by that is, I thought about my kids growing up at this property. I thought about us doing
retiring someday.
Yeah, retiring. I thought about me sitting on the back porch, someday in a rocking chair kind of idea, fly fishing in the river kind of thing. Well, yes, all of that could happen. It could have happened. But I realized very quickly, you know what? If I take the profits of what I think I can get for this property and pour it into other stuff, and pour it into other stuff, and pour it into other stuff, those dreams just got a lot bigger. Yeah. The possibilities just got a lot bigger. And so I would tell anybody, especially if you have a property that you're like, and here's the deal, Tom, this what we're talking about right now. This is a really big deal, because when I talk to people about when they say, oh, I want to buy an investment property out on the river, or I want to buy an investment property down at the coast so that we can go down there when we want to, but then rent it out when we don't have it. And I say to them, I've been there, I've done it. Yeah. Here's my advice. If you really want to invest in real estate, then invest in real estate and take the big proceeds from real estate and go do whatever you want. Go on the beach vacation, go camping, go to Colorado, whatever.
Yeah. Well, just look, the $600,000 that Chris made on this property will pay for a lot of vacations. You know what I mean? And a hell of a lot more. And the fact that he could probably take $600,000 and, invested it right, he could get a return on, even if he left it invested, he could get a return of, probably $180,000 a year if it was leveraged right. I'd say, I take it back. You'd have to borrow 3/4. Let's say, $120,000 a year, easily, or just keep parlaying it. That's the thing. If he took $15,000 and bought a property, and he basically made $600,000 on $15,000.
That's when that was my wake up call. Yeah. For me. Yeah. Because I always grew up under the understanding and assumption that debt is bad. Yeah. And for me, and we did that one a little bit backwards, because that was the first home that we ever purchased. It was the first piece of real estate we ever purchased. Not our primary home.
Right. Yeah, because you were living in the one
we were renting, and I just saw it and I said, "That's a diamond in the rough." Yeah. I know that's going to be worth something. Yeah. And it wasn't speculation. I knew the area, I knew value. Yep. I was like, "This is a good deal. Yep. We're going to do whatever we can to get our hands on it."
So he made some money the day he bought it, and look, it's just time does help too, but at the same time, he could have turned it and made more on it that day. And that's how all my properties, everything I buy, I make my money that day. And then if I'm going to hold it, and when you start to hold, you're kind of speculating. Every day you hold it, you kind of make less. Because if you flipped it and you made your gain right then and there, that's one thing. But unless you're going to reinvest the money that you take back out, then sometimes it makes sense to hold. But I always take the cash, reinvest. I mean, at some point, then I started, buying buildings and stuff it gets more difficult to sell something for $5 million, and then especially if your basis is getting near zero on that, you don't want to pay the taxes on it, so you want to defer them, and then it's harder to do because you have to buy something bigger and better. So sometimes it's easier just to pull the equity out and then go buy more. And if it's a cash flowing asset, it's real easy to do. But on his deal, I remember doing the math with Chris on this when he came to me. I don't know if I should sell it or not, right? He knew in his mind, basically. And I just reconfirmed, oh yeah, get rid of that thing.
It was really, the thing that was holding me back the most was the emotional attachment to the property. Yeah.
And here's the thing, just always tell yourself, if you're not buying it, if you're not selling it, you're buying it. Chris, and that's what I told Chris. I know I told you that. I don't even have to remember.
You did. Yeah. I remember.
I said, look, Chris, if you can sell it for $700,000 and something, would you pay that much for it? And I go, would you pay $600,000 for it? And the answer's no. And it's like, then sell it because you're buying it if you don't sell it.
Right.
It's very simple.
All right. Jorge said, how would you negotiate a first-time home in this current market?
So look, I do it all the time. In fact, I'm looking at a property that you know about tomorrow.
Oh, good.
We were supposed to see it at 5:30 today, but now I'm going to see it tomorrow.
Great.
At 3. And
I'm going to go look at it too.
No
just,
good.
I'm just
Yeah,
kidding.
yeah, I know, man. Yeah, no, here's, basically I can tell you, and you'll learn this in the book if you don't already have it. You don't insult the seller. You always be kind to whoever's selling. And you don't insult the property. You don't pick it apart, even if there's things that need work and that sort of thing. And there's a time when you have to get in, you might have to have a little back and forth in that area. But for the most part, you let them know that, oh, yeah, I like this property too. They liked it. When they purchased that property, they liked it. So treat the property with respect and their decision. It's like consulting the clothing they're wearing if you pick the property apart because they bought this property. And so so back to the negotiation. Look, you got to have the number. You have to know value. So anything I buy, I'm going to offer 25 to 30% under market. I'm not going to pay full price for it. And for good reason. If the market changes, I'm not stuck holding the bag. I can sell it, get rid of it, and still make some money. And believe me, let's just say I bought a property from somebody for $225 and it was worth $300. Okay, it closes. They walk away. I'm going, yeah, I made $75,000. Awesome. I flip it. I make my $75,000. Sell it for $300,000. Now that person's like, damn. I should have bought, I wish I wouldn't have sold it, because they sold it for $225. Maybe they don't know that I resold it. They probably wouldn't. But then they see the market change and they see that, like right now, how it's going down, interest rates are going up. Believe me, they're going, oh man, I'm glad I sold that for $225 because that's what it's worth today.
Right.
You know what I mean? They're glad.
On that note, Jermone said, I had someone reach out to me because her home, she feels she's upside down on it now. She bought her home in 2020 for $478,000. She had it appraised recently. It was only worth $395,000.
Yeah, and I hate to tell you, it's worth less than $395 because the interest rates just changed again less than a week ago.
Yeah.
But she got her appraisal yesterday.
Right.
So this is the trap. Listen, there's nothing worse than I've seen people do this before. They'll have a tract homes, right? They'll build like 50 in the first, and then the second phase and third phase will be 50 at a time. So they built, first phase, people buying them for $127,000. Second phase, they were up $147,000. Everybody feels really great about what they're purchased that are in the first phase. Second phase sells for, like I say, $140,000, $150,000. Third phase, 18 months later, and now they're selling for almost, $250,000, $300,000. Everybody's happy and excited. Well, then this happens. What's happening right now? The interest rates go up. First, people are optimistic that the Fed would never do that. A government never does anything. Fed's different from the government, but either way, the Fed would never do that. The Fed, and then the Fed does it. The Fed doesn't care. They have it on a mission, and they're going to do what they think is right. And it's lately what they're doing is the correct thing to do. I totally believe in raising the rates. You got to remember, I started in rates that were about 13, 14% in the 80s. I've never seen them so low as they've been when they've been low, like they have been recently. And so them going up, I think they can go up to 9, 10% because I've seen that before, and I have seen no reason why they can't go up. But your friend, again, she is upside down. There's no question she's upside down in that property. And a lot of people are, by the way. Anybody that bought, the delta's too great. Your interest rate went up 3 points. 3 points on $200,000, that's $6,000 a year. That's $500 a month, okay? That's just on $200,000. So, that's why, there's a lot of these, goofy gurus that have a high opinion of themselves that really don't know what they're doing. I've seen them. You don't see me collaborate with many people because there's so many of them are not very good. These guys that, tell people, buy it. And now these people that follow that thinking are upside down. A lot of the gurus are upside down in their investments too, by the way. Anybody can buy a property. When you're going through a nice term of good growth, everybody's a rock star. Anything you buy goes up. Anything you buy goes up. Everybody starts to think, oh, gee, I really know what I'm doing because values go up when I buy. Well, then this happens. This is reality check for a lot of people. And I'm just so thankful that everybody in my class, I don't know of anybody that everybody got in, made their money and got out in time. And we're all still looking at properties. Russ just tied up another nice one the other day. I bought one just recently, it just closed. And I'm happy with my purchases. But my hedge is buying under market. And that's what your head you should be too. And so hey, if you just got here, please hit that subscribe button. And I'm going to remind you guys to subscribe. It helps the channel. But if you don't have my book, get my book. Can I get the book up here? There's my book, Wake Up and Smell the Real Estate. It's been a bestseller on Amazon, Audible, and Kindle. And just get this book. I guarantee you, this book's worth more than half the courses that are out there for sale for 10 grand. It's just, and then if you can get in the mentorship is just on like the book on steroids. And there's so much more in it. And I'll let Chris can elaborate on that a little bit. Also, by the way, if you get in the webinar, you can, you have a chance at winning a $500 Home Depot card. We'll announce the winner in about, I think on the 15th of December.
Yeah. 15th of December, we'll do the $500 Home Depot gift card giveaway. If you haven't checked out the webinar, this is for people who aren't in the mentorship, but if you haven't checked out the webinar, you're going to hear from Tom. You're also going to get kind of a sneak peek of what it's like to actually be in the mentorship. It's just it's a couple cuts here and there of, Tom talking to the class and people asking Tom questions. So it's really good stuff. So check out that free webinar. It's in the link below. Tom, there's just some, again, I'm a little bit uneasy to make any purchases right now, truth be told.
Well, it's a declining
kind of like,
market.
It almost feels like, starting to feel like a false bottom, if you will. Right. Like, you think like, how much lower can we go? And then it's like, oh man, I think it could actually go even lower.
No, in fact, I'll kind of illustrate it here with this, what I can do with on camera right here. So let's just say that this line that I'm making right here. See that? Let's just say that's $1 million. Okay, I bought a property for $340,000 that had previously sold for $1.2 million. Sold for $1.2 million. Went back to the bank. Interest rates went up. Things got tough, and then then after I bought it. Not after I bought it, but after the first time it sold for $1.2 million, it went down and it dropped to 750. We'll call that the 750 line. And because I watched the whole history of it I'd already bought it, but I looked at the previous history. So he's talking about a false bottom. So it went out, then it went down, and it dropped to 750. Then guess what? It dropped again, but this time to 550. I keep messing up my deal here. So let me mess it up here. So you go $1 million, then you go 750, then you go 550, and then it went down to, I think it was it was $1.2 million, 750, 550, and then it went to me at 340, and that's where I bought it, down here. Okay, and then guess what? I held on to it and made money on it, and then it went back up to about $2.8 million.
How long did it take to do that, to go back up?
Oh man, I'm not even 100% sure.
I think I'm
going to say 6-8 years.
Yeah, and so this is somebody that's asking somebody that's never seen prices drop before.
Yeah.
Okay, so I'm like, okay, I'm just seeing this thing go, and so I'm kind of wondering, like, okay, are we just going to bounce right back at some point because somebody flips a switch, or is this going to take a really long time to get back to?
You know what? You mentioned the other day, if you guys take a look at maybe you can find it on your computer, Chris.
Sure.
The rates, how fast the rates went down in 2009.
Okay. Yeah, let me look at that.
Because you go look at how fast the rates went down in 2009. They went down about as fast as the rates are going up right now. And I think you can probably pretty much just guess that the rates aren't going to go down any faster.
Man, yeah, so I'm looking at it. So we're actually, our rates are climbing faster than what they dropped in 2008.
2009 was a big
2009 though, when it hit, everything just flatlined. Right. And we flatlined from 2009 to 2016. And then things started to creep up again.
What'd you do, 2007 to 2010 or something?
I'm looking at a 25-year chart.
Okay, let me see if I can grab something here. Did you, Yeah, okay. 80s. That's too quick.
And then we do this like little stair step climb from 2016 up to about
Oh my
2018.
God, look at that. Now, this is a good, I'm going to put this on. So take a look at this, just to give you an idea. Whenever you hear anybody say, "Oh, that'll never happen," they don't know what the hell they're talking about. Nobody, listen, the only thing, and it's not what everybody would like to hear, everybody would like to think you could talk to somebody that knows exactly what's going to happen is 100%, I know this. The only thing I know for sure is that I don't know for sure, okay? So take a look at this behind me, and this is when I started in real estate, okay, 1981. 1981 is when I was buying my first property. Look at that, 16%, right here, 16%.
Gee whiz.
Yeah, that's like right about the time I started, right there in 1981.
I mean, Tom, 16.
Yeah.
Like, we're not just talking double digits, but like we're up there. 16.
Yeah, in fact, it'd be interesting to put in a 16% interest rate on your home.
That's
looking at.
that's 5 times the amount of what some people just got mortgage rates on this past year.
Oh yeah,
5 times.
That's why I say, listen. And so when I really got rolling and really started making some big money, is right in here. See here, look at here. It's like a straight line. It dropped down here pretty quick. It looks like from about 13-14%, it went down to 10. That's roughly in 81 when I started. And I bought my first property. I got it 10%, owner financed. It was a beautiful thing. And you can see it jump back up. But overall, if you look at it, it pretty much kind of straight lined here for a bit at 10% for 5 years, 4 or 5 years. And then it started to go down again. And then it kind of bumped up and it started going down again. But it took a long time, before it went down quite a bit. And then look at here, when we talked about 2009, you can see here, looks like things dropped. Yeah, right here it went down, dropped like a rock because of the problems we had at that time.
So looking at the chart here, Tom, I'm looking at like, let's see, what was that, 2011, 12?
Yeah.
To maybe 2011, 2012 to maybe 2018. That must have, I'm speaking to you, I'm asking you, but for you as a real estate investor, that must have been a pretty sweet time in real estate because things were so consistent. Like you knew what it was steady.
Yeah, because I was brand new into real estate in 1981, all I was like, oh man, I can buy it. Oh, I can afford it. I got $1,000 payment and I can, it's cheaper than what I could rent for. And, that was the basic beginning, when I was just started. But I was a numbers guy. It was just simple. I mean, I only have so much money. I'm not going to be able to afford this if the payment's any higher than this. And I looked at the rental market and I rented part of the building out, offset my costs. Mm-hmm. But yeah. So in other words, it was 10% for a long time. I didn't even think twice that it used to be higher. I didn't think was it lower? We can see back here it was lower. If you look at the chart here,
right,
it was lower before that, but this is before I started. So I didn't have any, regrets or I was too young. I wasn't even born back here. I wasn't born. I was born here. But the bottom line is, this is what you have to look at this. You have to pay attention to this. History, when it does repeat, you can kind of look at what happened at that time. And figure, the recovery and a lot of recovery things are kind of the same everywhere. You know what I mean?
Mm-hmm. Yeah. Yeah.
A war will make a fast recovery, or used to. I don't know about now anymore.
Right. And as we're talking with, we're talking interest rates, we're talking purchase prices, we're talking, your down payment, all this kind of stuff. And I want to share with people that are watching, don't be intimidated by that. There are calculators to help you with this. I mean, I'm looking at a calculator right now that I use all the time. I can put in my purchase price. I can put in how much percent I want to put down. I can put in a percentage for my interest rate that I've been approved for. I can put in the loan term. I can put in closing costs. And then if it's something that I'm looking to not just flip, but rent out and have some passive income, I can put in how much I'm going to charge for rent. I can put in for a vacancy rate, a management fee, if there's going to be a management fee. And then it calculates all this. You can put in your property taxes, so you can know for sure what the numbers are going to be before you get yourself into that deal.
Yeah, absolutely. I tell people all the time, and they have a hard time believe it in the beginning, but buying a property is easier than buying a car. I mean,
Yeah.
A car, you're not going to get the same loan, you know what I mean? But
Right.
I mean, but let me get more to my point on this is when you buy a house, it's like going, it's just like going to the DMV and transferring title. You got a title. If you borrow money to buy your car, there's a lien holder, just like with a mortgage on a house. There's a lien holder on a note. Same thing. You got a note, you borrow money, there's a lien against it.
Right.
Clears up when you get it paid off. The only difference is your car value goes
I was
down,
going to say.
and your house value
I
goes
was going
up.
to say the only difference here is one asset's appreciating and the other's depreciating.
Yeah.
But it's also, you're talking about the intimidation factor. If you've never purchased a car, when you go to purchase a car for the first time, it's incredibly intimidating. You don't know the lingo. You don't know what's all this paperwork you're looking for, all of that.
Yeah, I mean, when you sign, most people don't even know what the hell they're signing.
Right.
And that is pretty common.
But after you do it the first time, the second time's a lot easier. You do it by the third or fourth time, you have your preferred title company, the paperwork. I'm not saying this to boast. I'm trying to build confidence here for people that are watching.
Oh,
I
yeah.
fill out the same paperwork that real estate agents fill out.
Yeah. And listen, you just have to buy right. And that's why, I push the mentorship, because I don't want anybody making a mistake. And like I say, Chris is a success story out of the mentorship, as are a bunch of people. And to Delta's question was asking about the calculators. This is within my website. You go into the calculators, and this is just a fixed rate payment calculator that you see behind me right now. And then make sure you can see it. Behind me right now. And then this is an interest only calculator, because you'll learn why this is. Never be afraid to have an interest only loan. It's a fantastic thing, but just never pay too much interest. You gotta keep your interest as low as you possibly can. And then I've got a deal calculator here, which, by the way, I have an app. I have an app called the Flip Anything. You can get it. It's called Flip Anything app. And I almost forget that I made it 5 years ago, but you can go get that free on the App Store, Google and the other, Android and the other. And this kind of falls into that category. Within that app, I have it so you can kind of figure out, what the profit margin is there, but also if you sell it to somebody, like, look what I have here. Here's an assignment fee. You have a property value, you have a contract price, and an assignment fee. And so obviously if you got a property worth, $250,000, a contract price of $20,000, you can come in here, you can, that would be worth maybe $5,000 to somebody. I mean, I'd give you $5,000 for a chance to make 50. And so now you go in here, you can see, the potential profit is 45,000. It's still 20% under market. When you can lay this out and explain to somebody, in a competent way where they can understand it and watch it, it's a very powerful tool. Yeah. And then this is one that I just ripped off from the web that's out there. This is a standard calculator. I think this will figure out PI and TI and different things too. PI and TI, I mean principal, interest, and taxes and insurance.
Oh, I think it was Cheryl. That reminded me of something. Cheryl, when you are buying your first home, I forget what the percentage is, but if you don't put a certain amount down, you will pay PMI every month.
Yeah, you got to have to put at least 20% down, otherwise you'll need PMI's private mortgage insurance.
Right.
And the bank will require it. It's a way to cover their ass. But if you anyways.
What else, Tom?
I don't know what else can we do here. But yeah, for sure, pay attention to the. Let's see that this play with the calculator. You don't need to get into my class to have that, but those of you in the class, you certainly should. But there's just all kinds of money out there to be made. You just have to treat your money like a tool. Don't overpay for anything. If you feel like you're scared, you're probably making a mistake. if you feel like you're unsure, you're probably making a mistake. You know, there's a lot of goofy, fake gurus out there that claim to have a lot more. You know, they're trying to be like a warehouse of everything. Like, oh, I can, if you want to do a owner finance deal, I've got a book for that. Oh, I've got a class for Facebook ads. Oh, I've got a class for making money on insurance. That's bullshit. Those guys don't have any particular expertise in anything other than they might as well be a used car dealer selling every brand of car there is. That's what they're concerned with. It's just sales and making some money. I want you to make money. I won't let anybody even get into my class unless I think they're going to succeed. And everybody knows it's been turned down. Anybody knows it's in the class. They know that I ask these questions. Do you have money? Do you have a few bucks? If you're 30, 40 years old and you can't save $10, $15, $20,000, and I don't need that money. That's not for me. I'm just saying then you need to concentrate on some discipline and saving some money and maybe getting a skill where you're making a little more money. It's very important. But it's out there. And, like a young guy like Delta here, you are a diligent student of the internet, and I hope you're flipping some things. He's a young man still.
Yeah, I mean, you can flip on Delta. You can flip on Facebook and Craigslist all day long, and make tons of money. I mean, just for kicks and giggles, I've got the kids tomorrow. My wife's out working; she's traveling right now, so I've got the kids with me all day tomorrow, Tom. And I found an item that's brand new, worth $500, and it's still in like new condition. And I'm going to meet up with somebody, give them $250. But you could turn around and sell that item. So there's tons of money to be made on other things. That's why we call it Flip Anything. On other things other than real estate.
Yeah, absolutely.
And it develops the muscle of negotiating, right?
Yeah.
And looking for deals.
And so look, when I made the Flip Anything USA, and I'm going to see if I can show this to you. I'll try to show this to you here. This is from the channel. Let me write in here, roll top desk.
Oh, this is interesting. Jermone just said, I would suggest start reaching out to some title companies and attorneys to see what deals have fallen apart because of rate increases. A buddy of mine picked up 2 deals by doing this.
Yeah, I definitely have some friends at the title. The contracts are falling out. In fact, I was tracking this 3 or 4 months ago. I think it was 3 months ago or 4 months ago. 15% of the deals then were falling out, and the following month it was greater. And I'm sure it's even worse now. But now they're probably not even going into negotiations now. But
right.
So behind me here, just for Delta or anybody else, look, this is. I just did this for the hell of it. I found a roll top desk I ran into. I knew it was worth like $4,000. I took up my phone and looked at it. Yeah, it's a $4,000 desk.
That is one of the best tools.
Yeah, it's amazing.
I mean,
yeah. And so I bought this for
value.
$200, and then I sold it for $800 immediately after. Now, it was heavy. Had to pick it up with a truck and take it over. But I kind of did this as a courtesy just to people watching, so that they would know that. But I bought a fire truck. I bought an American LaFrance, a 1978 fire truck. I bought that about 25 years ago. Again, I bought it on the internet too. It was like, it was when the internet was brand new still. Mm-hmm. I bought a 1978 American LaFrance. I bought it out of somewhere near Dallas, Plano, Texas. I bought it for $11,000 and I sold it for $30,000.
That's great.
Yeah, and let me see what else I can put in. There's a scenography machine. Yeah, so look, this is another one. You'll see here. I'll get out of the way here. This is a scenography machine. In fact, we could watch this real quick. You want to watch it?
Yeah, I don't even know what that is. Let's watch it.
Yeah, so watch this because this is interesting. But this give you guys, listen, I created a company. I created a company called Verizum because I was bored to death. And Verizum is a decent company. It's still alive and growing, or going. I won't say it's growing right now. But that was a company I created kind of out of boredom because, I would make my investments and then I'd be broke. And then I'd need to save up my money again to buy my next deal.
Well, you wouldn't be broke. You'd just be asset heavy.
Oh, yeah. Asset. Well, that's still cash poor.
Yeah.
And I've been in those positions before. But, again, so even if you guys that, you got your assets tied up, I mean, something like this, let's just watch this real quick. I haven't been a while. Let's see. Guess we'll see if the audio works here too. So you guys tell me if you have any issues. But so this is a scenography machine, just so you know, is it was something I was, I didn't even know what it was until I figured it out. But what it is it's something that the plays use. If you go to a movie theater and they make it look like it's raining, they have little lights. They have these things in there that, it's a $15,000 machine. And I bought it for like $100, and I sold it to a local theater for $3,000. But here, let's, I don't even know if we're going to see what it is. Let's see. Probably just describe it. Let's just see. Tom here from FlipAnythingUSA. Today I want to tell you about how I once flipped a projector. Basically, I went to a military auction and I found it within the lots of things that they had for sale. I discovered this big box. It was a really high quality box. I was kind of intrigued when I found it. I opened it up, I looked in it. I still didn't know what the heck this thing did, but it looked like I could tell it was an expensive piece of hardware. I got the brand name off it. I looked it up on the internet. Turned out it was a projector for projecting like theater backgrounds. If you go to the theater and you see actors act, they'll put projections that represent a storm or whatever's going on with the scene. Well, that's what this was. So I found out it was worth about $15,000. They still made them. They were like over $15,000 new. This thing was just like new. So many things you buy at, just so you know, just so many things you can buy at city auctions. And after I looked it up and found out it was worth about $15,000, I made an offer of $200-300. I got it. I bought it. I got it home. I immediately went and started calling theaters, big theaters, and said, hey, I've got a projector that'll make a scene on the back. I think it's something you can use. I told them what it was. They immediately knew what it was. They said, yeah, we could use one of those. What do you want? We settled up on a deal about $3,000, $3,300, something like that. Sold it to them. They were happy. I was happy. I made $3,000. And it didn't take hardly any of my time at all. So I made that. So anyways, that's the story. That's and great. I thought I was going to maybe show you a picture of it, but I guess not. So you got to just think in terms of money and deals. And, listen, something may not have value to you, but it has value to somebody else.
Oh, my gosh.
And so just because you find something, that was a good example of finding a quality product. I didn't know what the hell it was, but I figured it out. I go, well, this thing's worth $15,000. Yeah. And
I bought my buddy and I were going on a hunting trip, and we needed somewhere to stay. I mean, this was out in the desert almost. And so I found this little trailer that was a canvas pop-out tent.
Oh, yeah.
And I'm talking like the thick brown canvas.
Okay?
Yeah. With the big heavy zippers, and everything. And so it kind of folds out and it's got a bed on each side. And this thing had 2 flat tires, and I saw it on Craigslist. I said, I think that'll work.
Yeah.
And they're like, got any tires? And I said, I'll go buy 2 tires.
Yeah.
So I went and bought 2 tires, jacked it up, put it on there. I gave them $200 for the tow because they just wanted it out of the driveway.
And you flip it.
And I used it for my hunting trip. Yeah. I had the new tires on it. Got back, and I staged it. I put like a really cool looking blanket in there, put a table in there, some coffee cups.
Oh yeah, stage.
And then I took some pictures. Somebody came by and gave me $1,000 for it.
See, that's the thing. And listen, it feels good to make money, but to make 5 times what you paid for something really feels great. And it can happen with real estate too.
Yeah.
So I'll show you one more thing here. What did I call it? I was going to show you a property that I was trying to buy, and I ended up renting it for a fraction of what I could rent it for. So I rented it, and then I subleased it, and I made about $17,000 a month on this thing. And then pretty soon I made more than $20,000 a month on this over a period of 7.5 years. So I ended up making $1.5 million, and I didn't even own it. You know what I mean? And this is this is why it's so good to be in the mentorship and you'll even I'm learning there's other people in the mentorship that bring new ideas that made me think, there's something I can do. Or, I think about it too. I don't know everything. I've seen a lot of stuff. And one of the things I'm really good at is negotiating. And that's, as I understand what's important in the psychology, and that's probably one of the most important things that you get out of a mentorship that you won't get out of a book. And that's why, I did the mentorship, is because I do realize that that is something that is vital. It really is vital. So Go ahead and elaborate on that, and I will try to find this video, Chris.
No, so what Tom's talking about, if you guys are watching right now or you're still with us, thanks. Hit that like, subscribe button, but also encourage you to check out the link below. There's a link for both a webinar that's free. You can get kind of a taste of the mentorship and what that's like and who Tom is. And then there's also a survey. And if you're curious, like, hey, is real estate investing for me? Is that a best next step for me? Go to FlipAnythingUSA.com and take that, take the survey. Tom will look it over himself, and he's going to take a look at it and say, yeah, you're good to go. I think you know, getting
there's
into
no
real estate
guarantee I'm
investing
going to say that.
well, no, or you're going to say, or he's going to say, no, this isn't for you right now, and here's why. Here's some other suggested next steps.
What I want you to know is I'm 100% on your side, and I will just, if you don't have my book, I'm going to tell you, go get my book. You sound like you're interested in it. You might look like a good candidate, but go get the book, and then it takes 3.5 hours to read. If that gets you excited, if this sounds like, wow, I can do this, then you're on. It's on as long as you got a few bucks in the bank, and you have common sense. But so look, I'm going to show you one more video. We watch this one here, and we'll close out. Are pretty quick here, but this is, I want you to see, I made over $1 million. It was $1.5 million. I always try to always try to under pitch and what I've made, and I tell everybody to do the same. That when I talk about other people that they've made more than what we say. Because I never want to be caught exaggerating, ever. I would never do it intentionally, I can tell you that right now. But so look, this is where re-renting, I wrote $1 million plus profit. It was really closer to $1.5 million, but we're going to say $1 million. And take a look at this. I'll play it in high speed, because this is something that any of you could do. Any of you could have done this. This didn't take any big money at all. Man, I'm going to have to shave. Let's see. Tom here, Flip Anything USA. It's funny, I'm driving around looking at real estate, and I realized there's another way I've made money that I should share with you. Looking at real estate, and I realized there's another way I've made money that I should share with you. Several years back, I was negotiating the purchase of this building you see behind me, and we made a deal. I was buying it for $1.7 million, and what happened was there was problems with this property, in as much as there were some issues in the ground. In fact, I'll show you what I'm talking about. There was issues with this property in regard to the company that was in here, is my understanding, would you see these tanks behind me? That's where they test the ground material that they get out of the ground table here. But what happened was this property had a tenant in here that processed circuit boards, and my understanding is that some of their waste would process out and go into the ground. And for whatever reason, I guess it wasn't good for, there was a concern. And you can see behind me, these are test digs where they have like these little wells that they come back and sample to see if the ground is contaminated, or if it was contaminated, if it's improving. And so what happened was, First Bank says, hey, we can't finance that thing. It's got these issues. It's like a super fund possibility, meaning there's a problem, like, they don't want to loan me money on property that can be taken away or be considered so contaminated that it's not worth what I paid for it. So rather than just describe to you right now without seeing it, that's why I wanted to go back to the video. But this was a beautiful building. It was an old, look at that. It's got a nice loading dock you see in the back
Really
there.
well built.
Oh, this thing's so well built. It's got the best roof in the world too. It's got what's called a coal, C-O-A-L, coal tar pitch roof. This is a roof that you could bury an axe into it, and the next warm day it would just self-heal. Oh, wow. It's wonderful. And guess what? Only the government is allowed to use that kind of roofing today. We can't put it on.
No kidding.
Yeah. It's so good, only the government gets to use it, and put it that way.
Okay.
But this parking lot would hold 105 cars. This was a beauty.
So what happened with the deal, Tom?
Basically, I went to 3 banks, and none of the banks would lend money on it because they were worried about those pits that I showed you and all that stuff. and they were worried that it would be becoming a Superfund site. In other words, it had toxins
Yeah,
in it. It was on the, and it was under the eye of the government now too. And this guy was convinced that, oh no, that'll all clear up soon. I said, well, look, I've been to 3 banks. The fourth one, if they tell me yes, I'm afraid I'm going to say no. And he says, what if I give you a really good deal renting it? And remember, this building's worth about $25,000 a month. I said, well, what kind of good deal? And maybe let the seller make the offer. It's one of my chapters. He said, how about $3,000? I said, it's a deal.
Oh my gosh.
Yeah, and I was already buying 2 more buildings.
Oh man.
I'd already written this one off, and I was already buying 2 more buildings. I said, I'll take it. Took me nothing. So I came in, gave him some money, and then
and that was like a year to year for you?
I paid him $3,000 a month, and immediately leased it for $17,000 a month.
Right.
So I was making $14,000 a month on a month later, and it was one of my other business interests that I was able to put it into. But imagine, because look, it didn't take $5,000 out of my pocket to tie this up with the lease and everything else. And now within a month, I had a tenant in there, and now I'm making, like I said, about $14,000 a month.
Incredible.
And just like that. So what is the math? That's about $160,000 a year in the very beginning, but then it escalated to $25,000 a month. And yeah. So, and that went on for 7.5, 8 years, something like that. And those are the kinds of things you can do. And that's why when I say these are the things you can do, I'm proving it because I'm showing you that I actually did it. And when I tell you that you can make $1 million in a year, or you can make $100,000 in a year, I mean it, because not just that I've done it, I have students like Chris here and others that have done it now. When I've got students that can actually demonstrate that they've done it, I know you can do it. It's something that can be learned, right?
Well, and once you learn how to do it, once you learn how to do it, it's a bit contagious. I mean, like you just want to keep doing it. Well, it gets easier, and you just want to get out there and do it. Like, I mean, for the longest time, I wasn't in any of the YouTube videos, even though we live near each other and whatnot, because I've been busy making deals.
Right. Yeah. I mean, and he started. Yeah. That's what happens is, we do the mentorship every Saturday. Well, then pretty soon, a lot of the guys that start active and start really making money, they're not showing up as much on Saturday. They pop in for an hour to check in, but because they got things to do, they got priority. And it's kind of fun because I'm watching guys like Chris and others, and I see that the problems that they're running into. It's like when you build a business, you maybe have a couple people working for you, then you get to 7 or 8. Well, then all of a sudden you can't be on the field working with people. You have to be bidding. You have to be bidding and bringing the money in for other people to do the work. The dynamics change. Well, that's kind of how real estate is. Pretty soon you start to have more than you can manage by yourself. Then you start to hire people or hire management companies, and I'm starting to see these growing pains already with my students that didn't have anything a year or two ago as far as real estate, and now they're already starting to have growing pains. In fact, I have one, he said, you know what, he's made a few $1 million, and he's like, how much is enough? He's already asking these deep questions. When is it enough? I said, well, you know what? I said, I'm laughing. I said, I don't know, because I haven't found that number yet. But it's whenever you want. You get to make those decisions. You know what I mean? If you want to just make $1 million or $5 million or $10 million, you want to quit at $20 million or whatever you want to do, those are options that you have. And like I say, I have the confidence. That's why, look, I'm goofing around. I could be making a lot more money. Doing this stuff isn't making me any money. Right. But it's an option I have. And to be honest, as I'm getting old, my legacy, I want to be one of love and of helping people, and one that I can be proud of. I don't want people saying, oh, yeah, that bastard ripped me off on a bullshit course, which is what the legacy of a lot of these fake gurus out there, that's what it is. And I don't want that. I want somebody who said, man, thank God I ran into Tom. I'm so glad he took time to talk to me and help me figure it. And then because I get these kind of testimonials.
And there's a big difference. Okay, so this is what people need to hear. People that are considering courses, people that are looking into changing lifestyle from one job into real estate investing, what people need to realize, because I've seen it with my own eyes, I've listened to it with my ears, I've had friends that have been taken advantage of. You show up to these seminars, you pay money to go to these workshops, you show up to a cohort, and for the most part, I'm not gonna name names. I'm not gonna rule any one person out, but I would say for the majority, what they're going to try to do is take your money and see how much money you'll actually give them to be pooled into with all these other people's money, and they're going to go, they're going to go make a deal, and they're going to take the profit first for themselves, and then maybe you'll get your money back, maybe not, but what Tom does is different. You pay a fee for a membership in the mentorship. You're a part of a cohort of everyone making their own deals. People talking about their own deals that they're making on their own, negotiating their own deals, and Tom's going to show you how to do that.
Yeah, and I'm not handing you a stack of paper and a few CDs. You have access to me. Okay, you have access to me. That makes all the difference in the world, right? I mean, you know as well as anybody, right? Having somebody to talk to, having somebody to say, hey, what do you think? Maybe you already have the answers, but you're not sure. And somebody says, oh yeah, no. That's it. You're good. Or no, don't do that. And I'll tell you why. You know, it's fantastic to have somebody that's kind of got your back. And listen, look at all the, you can look at the testimonials. And I apologize.
I went and had a beer with a friend the other night, Tom, and he asked me what I was up to, and I kind of told him what I was doing and shared with him some of the recent success I've had. And he goes, man, I hope it works out for you. He says, I spent $15,000 on a course, and I made nothing.
Oh, yeah. No, believe me, I have the horror stories. I have all kinds of emails. I have video testimonials where people feel very jaded, very, very critical of Chris Crone, Grant Cardone. You know, listen, I could be a YouTube backslapper, but I'm not one of the thieves or people that I consider thieves in a big way. I'm not going to sell my soul for profit. You know, I am an advocate for the people. I'm like the YouTube viewer, right? I'm on the side of the viewer. I'm not, you know, they have this thing they say, you know, honor among thieves, or listen, that's not me. I'm not gonna, and that's why I haven't made any friends in the YouTube world as far as real estate people go. And I'm not saying, listen, I like Ben Mala. Ben Mala was actually a guest, you know, in the class. It was a really cool thing. Ben Mall is the real deal. I'll say it. I really don't know that anybody else is. I mean, there's some guys that I think are okay, you know, but I don't know.
I think I've watched a few guys that do
old school real estate. He died.
Yeah,
he was a nice guy. He was a good guy.
Yeah, there's I'll have to look him up. We can watch him sometime. He does really good educational videos, whiteboard videos. He owns a bunch. He owns a big house rental home portfolio.
Yeah, there's one rental at a time guy. He's not too big,
there's but nobody walks. But nobody walks all of their real estate the way you walk it.
Yeah.
You know, nobody shows you like, hey, we've got a roof caving in over here, and we've got to fix a leak, and I'm going to show you how.
Listen, I've done damn near 1,000 videos, and they're all. I show you the stuff that I buy. I show you the stuff that I sell. I show you the profit that I make. I show you that I roll that profit into buying a bigger and better building or a bigger and better house. Over and over, I've been doing this for years now. And this is why, I've got such great testimonials.
And here's the deal. If I could speak frankly, sure. I think that you're a hard worker, Tom. Like if people want to get into real estate investing because they think you get a fat paycheck and you just get to take it easy, there's a time for that, but you've got to work for it. And so don't think that if you're thinking you're getting into real estate investing because life's just going to be super easy, there's still problems. There's still things that you got to solve. There's issues you got to handle. But when I met you in Home Depot, you're holding a piece of copper pipe in your hand. And I was like, oh my gosh, he actually does his own stuff. He's the real deal. No. And so I'm a hard worker myself, and I just appreciate that. If you're thinking about getting into real estate investing, the profits show for the work you've put into it as well.
So look, you can work hard, but let me put it this way. I had a student that I had to help out. We got in a situation, and I got in and did the negotiating for him. And me and him are texting back and forth, and this is kind of a hairy deal. But there was fantastic money to be made. And I'm texting him, and he's like, oh, he was so relieved that we went up from 50 and we got $100,000 now. We got $100,000 for sure. And I said, hey, this is going to take a while. Let's just keep working it. He was like, he was just relieved to be at that point, and he'd already been through some tough stuff. And I said, look, I texted him, I said, listen, we're making $80,000 an hour. Just hang out. And so a few more hours went by, and we went from 100 to 360,000. And it was a wonderful deal. But I'm saying, yeah, I worked my ass off. I was sitting there all day, okay? And I did this for my student. This isn't even for me. But this is what, the couple grand that he spent on me and, learning from me for a year and having me come in there. And I got a great video to share with everybody and a great story to tell. It's fantastic. But believe me, I am fiercely competitive. And I don't like to lose. And I don't like to be wrong. And so I'm very careful. But it's very important to me. You know what I mean? I mean, like I say, I like to win. And so when I have a student in there, it's like I'm in there. It's like I'm in the ring. I don't want you to lose. I want you to make some money. Mm-hmm. And it makes me look good if you make money. I mean, I'm aware of that too. But so like I said, I'm just so gratified. I got the smartest students and hardest working like Chris and all these people you see right here. Look at all these guys. These are all fantastic. Ken, Chris, Tina, Garrett, Kai, and others here. Like I say, how hard can you work for $80,000 an hour? You know what I mean? It's just, and that's the kind of money you make in real estate, by the way. Yeah. You make one good transaction, you make $300,000 or $400,000 or $80,000.
I think what blows my mind, and again, I do believe you have to have a passion for it. Like you've got to have a drive to want to get out there and do it.
I think you'll develop it if you don't.
Right. Well, and here's why. The amount of time and investment that you put in to make a deal, your return on that, be it $30,000 or $300,000, it's mind blowing to me every time I make a deal of like, really? Yeah. That's all I had to do to make this happen? Incredible. Yeah. Incredible.
Yeah. No, there's nothing like it, folks. So listen, if you just got here, get the book, Wake Up and Smell This Real Estate. I can't believe we never had a call. We did a lot of talking. We didn't do any calls. But it's been great. And look, trust in yourself. You can do it. A lot of people don't feel they can do it. A lot of people are jaded because they got ripped off and paid some other fake guru money, paid them $997 or something like that. And I understand that. But a book is $10. Is nothing. And that's where you start. And then go by credibility. You watch my videos. Right. I show you how I've done it, how other people have done it, and it's real. And a lot of people have a hard time believing it's real. A lot of people are too lazy to actually dig into. And the people that are out there that are lazy, listen, you reap what you sow is all I can tell you. But anyways, so
and if you want
links below, the webinar, get in the free webinar, take the mentorship survey. Right here, when you come into the Flip Anything class or the Flip Anything website, the mentorship survey, click on that. Very, very simple form to fill out. And you fill that out, and I'll read it, and I'll give you my 2 cents. And it may be life-changing. It really can be.
Yeah. And also, for those that are even still hesitant, Tom, I know that on your website you have a money-back guarantee.
I do. Oh, yeah, listen, here's the other thing. I think I'm the only person that I have a 72-hour money-back guarantee. If you're not 100% satisfied, if you're not thrilled, then just no problem. I've only had one person back out.
And I saw you the other day. You refunded their money.
Oh yeah, immediately.
Yeah.
Oh yeah. No, I said I don't want. Listen, I remember I had a confrontation with. I dated this girl, and I'm dropping her off, and her ex-boyfriend was standing in the driveway, and he's angry. He wants to fight, and I told him. I said, hey, listen. I go, look. If she wants to go out with you, it's okay with me. That's what I told him, and he just kind of is stunned thinking about it. But yeah, the bottom line is it's sick to want to be with somebody that doesn't want to be with you. Okay, and I'm just going to apply that to this too. If you don't have a passion for real estate, you're going to fail. I don't want your money. I don't even want you to sign up, and that's why I dissuade people that I don't think have it. I let one slip through the cracks. Bottom line. And somebody I probably should have just said no to from the begin with.
Sure.
But I've only had one, and this is only about a week ago. And it may be related to money and, the unsure economy. I don't know. And I get that. I totally get that. But listen, get in here. I might even cut you a special deal. You know what I mean? I can do whatever I want to do. But if you you show me that you got the chops and the desire, and fill out that mentorship survey, we'll have a call. And maybe I'll even give you a little bit of a better deal. Listen, I want winners. I want people that'll make money. It makes me look good. So it's a good business decision anyway for me to do that. So, but if you got money, I'm going to smell it, and I know you can afford it. So, anyways.
But treat yourself. I mean, buy yourself a gift. We're getting into the holidays. Like, gift yourself the
get yourself
mentorship.
the book for sure.
Yeah, the book at least. Gift yourself the mentorship and get out there and start making some money.
Yeah. All right. Hey, thanks, Chris.
Yeah.
I appreciate it.
Pleasure.
And everybody, I can't even put on my Flip Anything wrap right now, so I don't have to. Oh, yeah, maybe I can. We'll see you guys later.
Don't stop and listen. Time is on a mission to eliminate all the snake oil and the fake gurus that fake y'all. He'll show you how to build an empire, starting with nothing but a desire. All you really need is a good mentor, not a used car bullshit. With time, you'll learn to crush it. Investing like Warren Buffett. With real estate, you cannot procrastinate. Everyone who hesitates is left at the starting gate. Hey, yo, so don't delay and join today. The mentorship and flip anything. USA, go.